Welcome back, guys. Welcome back to Trade Pro FX, where we help you decode all the mysteries of the market. So today we will be generally discussing about the candlestick patterns. Whether you are a beginner or a seasoned trader, understanding these patterns can help you give you a powerful edge to maybe to trade. So today we will explore all the candlesticks patterns that are maybe essential or necessary. So through this quick reference guide to candlestick patterns here to Trade Pro FX, we will dive into this bullish and first discuss this bullish, this one, and the bearish candlestick. So let's first understand the basic building blocks of these two candlesticks. So the main types, we have a bullish candlestick and we normally have a bearish candlestick. I hope till there we are together with that. So how does a bullish candlestick form? So for a bullish candlestick, it normally forms a crossing price. That crossing price, it normally forms when the crossing price is higher than the opening price. It signals a buying pressure and potential uptrend, or a potential momentum which is on an uptrend. Typically, these candlesticks are usually green or color white. So if you see a green candlestick which is bullish, you should know that it represents a bullish candlestick. So let's now talk about the bearish candlestick. So how does the bearish candlestick form? So when the crossing price, this one here, when the crossing price is lower than the opening price, which is here, when you discover such kind of a candlestick, it shows that the opening price, which is on top, and then this is the crossing price, signals selling pressure and a downward momentum. And these candlesticks usually, number one, they are usually color black. When you spot them, they are usually color black or color red. Like here you can see it's color red. So with that basic knowledge concerning that, I guess we can now go to the next chapter, which is talking about other candlesticks. So let me just take my mouse back and we discuss maybe the next patterns of the bearish hanging man. You see, this is a bearish hanging man, and it's very important to understand these patterns. When you discover this bearish hanging man, it appears to be on the top. It appears to be on top. Maybe you are discovering an uptrend, and it has a small body with a lower shadow, like this one. As you can see, it has a lower shadow, and it indicates that now the sellers have started stepping into this market, and a potential reversal may form. So if you discover this kind of hanging man here, what do you note? That after you see this, it has formed a long lower shadow. It indicates that now the sellers on that market, now the sellers are starting to get into that market, and a potential reversal may literally fall to the downward side. So let's talk about the shooting star. The shooting star also forms at the top of an uptrend. It forms on top of an uptrend, and it has a long upper shadow. This one, which also is a weak. It has a long upper shadow and a very small body. This shows that now the buyers were strong initially. But now the sellers have gained the control and now are controlling that market, signaling a possible reversal to the downside. I hope with these two first we are conversant with them. So next, let's talk about the bearish engulfing. The bearish engulfing, number one, is a pattern which occurs when a smaller bullish candle is followed by a much bearish candle, and you can see it there. When this bullish candle, this one, is followed by a bearish candle, this one, that candle completely engulfs or crosses below it. It completely engulfs this small bullish candlestick here. This indicates what? It indicates that there is a shift from the buying pressure. This was a buying pressure. It indicates that there was a shift from this buying pressure, this one. Now it hits that after now that bullish candlestick has been engulfed completely. So it now shows a potential downtrend. As you can see, after that candlestick was originally engulfed by this large bearish candlestick, it showed now a bearish trend. So whenever you see this bearish engulfing, normally just know that after it has completely engulfed that bullish candlestick, this small bullish candlestick, it shows a potential downtrend. Moving on to the this bearish harami, it is a two candlestick pattern where the large bullish candlestick is followed by a smaller bearish candlestick, which is like this size, and this small candlestick fits very well within this range of this previous candlestick, so suggesting that now the trend is losing its steam and a reversal might take place. And that's what happened here. When the market was an uptrend, then this bearish harami, which was in between that large bullish candlestick, formed that pattern. Now it indicates a reversal, and its reversal now to a down trend. I hope we are together to that point. In case you are not understanding, you should please kindly just ask maybe on the comment section. So let's proceed. When you see this dark cover here, this dark cover is a pattern that happens when a bearish candlestick, crosses below the midpoint. So I told you, well, does this candlestick, we started by knowing how the bearish candlestick opened. So it opened at this point. That is the point. So that is the point that bearish candlestick opened. Now it has crossed at that point. You see, it has crossed at that point. So what does the dark cloud cover pattern happen? How does it happen? It happens when now this bearish candlestick here, candle crosses below the midpoint. You can see it crosses below the midpoint of the pressing bullish candlestick, and this potential reveals that there is a potential reversal, especially when it forms near a resistant level. And we talked about all these resistant and support levels. So whenever you see it is near a resistant level, there might be a potential. So you can see this pattern here. It was moving on a bullish candlestick, on a bullish trend. You can see. Then this pattern came above. The dark cloud cover came, and I've told you that means a bearish candlestick moves just slightly down to below the midpoint of this preceding bullish candlestick. Understood? And then it shows a potential reversal to any side, and you see it shows a bearish. So the bearish, that's what it's called on the bearish side. So it now shows a potential reversal now to the bearish direction. And I've told you this candlestick forms normally very much times whenever you discover that it's near a resistant level. So guys, let's proceed to the next pattern, which is the tweezer tops. So as you can see, the tweezer tops, number one, let's now talk about the tweezer tops. The tweezer tops occur when two candles have nearly identical highs. Like here you can see these are identical highs, signifying or indicating a rejection of higher prices. So this pattern now normally indicates a bearish trend. So whenever you see this kind of pattern appear, it now shows a bearish trend on the downside. You have to see a first an uptrend, you discover it, then you can consider it taking a bearish trend. We have now next the evening star. This evening star represents 3 candlesticks. So when you see number 1, this candlestick, number 2, this candlestick, and number 3, this candlestick. So what do you know? It is a 3 candlestick pattern that starts with a strong bullish candlestick, followed by a small intensive candlestick which resembles the shape of a star. Hope we are together. It shows or resembles a star. Then it ends with a strong bearish candlestick, and this shows that now the buyers who were before in control now are losing control of that market, and now the sellers have started taking over the control of that market. So with that, if you spot such kind of patterns, I hope you are just understanding how they are. You first see this evening star, which has 3 candlestick pattern, which starts with a strong bullish candlestick, then a small intensive candlestick which has represents a star, and then ends with a bearish candlestick. So let's proceed to the next pattern. We see how it happens to the other better patterns. So let's first discuss about we have discussed about the tweezer tops. So the next is this bullish hammer. I hope you can all see this bullish hammer. So what does this bullish hammer represent? So whenever you see a bullish hammer, it forms at the bottom of a downtrend. It normally forms at the bottom of a downtrend. So whenever you discover a downtrend, this hammer now comes into the market. You see it how it is. Then whenever you discover this hammer and a bullish hammer, it has a small body. You can see it has a small body, and then it has a long lower wick or a shadow, signifying that now the sellers tried to push the market continuing to the downtrend, but now the prices, the buyers have stepped now into the market, taking control or regaining control to the up direction. So the opposite now is for an inverted hammer. For an inverted hammer, it looks like the same as this one. It looks the same as the hammer, but now it has a flipped upside down and also appears at a downtrend. Also, it normally appears on a downtrend, and then at the bottom of that downtrend, it suggests that now sellers, buyers now who were able to recover this momentum now are signifying a reversal to the upside. So when you see this inverted hammer over a strong selling downtrend, then you see it now shows you an entry for buyers, because the buyers have now started regaining their momentum or control of that market. So if you spot such kind of patterns, just know they are signifying a bullish trend on the upper side. I hope we are together. So let's proceed now to the next one. So let's proceed to the next candlestick pattern, that the bullish engulfing. This one now. So what does this bullish engulfing indicate? It is just the opposite of the bearish counterpart that we discussed. So a bearish candlestick, this small bearish candlestick is followed by a large bullish candlestick that completely closes or engulfs this previous one. And this shows when when we see it was on a downtrend, and you see now that the sellers have started to weaken, the trend shows a potential uptrend. So I hope we have understood that when you see this candlestick has completely been engulfed by this bullish candlestick, it shows a shift in momentum from sellers to buyers. So let's proceed to the bullish harami. The bullish harami has two candlestick patterns, where the large one is a bearish candlestick. As you can see, this candlestick is followed by a small bullish candlestick, this one, and this indicates that the selling pressure of that market is weakening, and the buyers now will take in will now pick that trade and start moving up. So I hope we are together on that point. So whenever you see such kind of a trend, you definitely know that now we are most likely, after this pressure, selling pressure is now weakening, and now we can take a buy pressure. So the piercing pattern, this piercing pattern is one of the confusing patterns that most of the people normally do not or forget how it normally forms. So let's look at it very carefully how it normally works. So for a bearish piercing pattern, I want you to look at it very carefully. This is a bearish candlestick, this is a bullish candlestick, and it normally has only these two candlestick pattern, and that occurs in a downtrend. You see, it occurs on a downtrend, and that means that a large bearish candlestick, this large bearish candlestick, which is also represented by that one, this large bearish candlestick, I want you to understand very well, this large bearish candlestick is followed by a bullish candlestick that closes more halfway up the bearish candlestick. Understood? It crosses halfway more the bearish candlestick. So you can see it is almost halfway. It has crossed maybe halfway. So after it opened, it has crossed above the bearish candlestick, and the buyers now have taken control of that market. So whenever you see a bullish candlestick pattern forms in a downtrend, you take a buy trade. So I hope you have understood those key patterns for those ones. So let's move to the next. So guys, let's discuss a bit about this certainty and uncertainty candlestick. So I normally like to show my people, or the traders who have subscribed to my YouTube channel, some of the key things that they need to know. So you can see this, I've named it certainty. So when we talk about such kind of a bullish marubozu, it is a candlestick with no shadows or wicks. You remember the normal candlesticks have wicks like this one. You can see this is a wick, this is a wick. And for a bullish marubozu, is a candlestick with no shadows, meaning it opened here at the lowest price and then closed at this point, which became the highest price. It shows a very strong buying pressure and certainty that an uptrend will occur. I hope we are together with that. So it shows that it is very certain that an uptrend will now proceed or continue. After that, you see this bullish marubozu. The same opposite for a bearish marubozu is just the opposite. It has no shadows. As you can see, there is no shadows. It opens here, then closes here. And That's why I'm telling you it has no wicks or shadows. So it has opened at the highest price. Then after opening at that highest price, it has closed here at the lowest the lowest point. It now signifies or signals strong selling pressure and a continuation of the downside. So you can see this, it was a downside. These bearish marbles have come, so it signals continuation of a bearish trend. So I hope those two these two bearish and the bullish marbles have been understood very well. Generally, talking of doji, they are candlesticks that it forms when the price and crosses price, when the open and closing price, like generally how we spoke about the bullish and the bearish candlestick. So for a doji candlestick, the open and closing price are usually the same, very close. So you can see the open is here, the same price, and the close is here. So when the open and close prices are the same or very close, representing indecision in a market, a long-legged, you can see a long-legged doji has 2 weeks. It has 2 weeks. This is the highest point and this is the lowest point. The open and close of that candlestick. So a long-legged doji has long wicks, indicating a tough war between the buyers and the sellers, and no one has gained control. And maybe assuming it was like this on an uptrend, and you discover such kind of a candlestick, just know that we are in an indecision. So the buyers and the sellers have shown or have not shown they have not shown that who is better or who has gained control over that market. So most likely it represents uncertainty. That's why I've named it uncertainty. Same case when you see it when a bearish trend has been formed. So when you see a bearish trend has been formed and you see this kind of candlestick, that represent a doji candlestick. It has no, the open and close price are usually at the same place or at the same level, showing or indicating that there is a power of war or a tug of war between the buyers and the sellers, but no one has gained control over that market. So when you see it on an uptrend or a bearish trend, just know that no direction, it shows indecision of that market. So let's proceed to the next. The next point is the neutral candlesticks. So based on the bearish spinning top, so with these spinning tops, they are candlesticks with small bodies, as you can see, and long wicks. A small body which has an open and close, and they have long wicks, and these wicks are usually on both sides, indicating uncertainty. A bearish, maybe talking of a bearish spinning top. So assuming this you can see this is a downtrend. This is a downtrend, and you spot a spinning top. It shows indecision at the top of that trend or at the bottom of that trend, I mean. So when you see a spinning top, a bearish spinning top at an uptrend, you see at an uptrend, this is an uptrend, and you spot this spinning top, the bearish spinning top, it shows an indecision of that trend, that uptrend, and a bullish spinning top shows an indecision of that downtrend. I hope we are together. So whenever you see those two patterns have formed, they show indecisions of the market. So just note that there are some patterns that show uncertainty. So so next, let's talk about the next candlestick pattern, and we will talk some of the combined patterns and their equivalents, how they normally behave. So with those, just stay with me here as we now navigate to this combined bearish engulfing, which results to a shooting star. So when you see a bearish engulfing, is often equivalent to a shooting star as both signal of an uptrend. So it can show this shooting star, and the both signal, it shows a reversal after an uptrend. Understood? Then look at this bullish engulfing. After you spot a bullish engulfing, it can be seen as equivalent to a hammer. It can be seen as equivalent to a hammer, both signaling bullish reversals. So I hope we are together on this. I don't know whether you want me to repeat. There is another combined patterns that you need to know, and these are the piercing pattern. As you can see, this is the piercing pattern, and the piercing pattern is also equivalent to a hammer, both appearing at the bottom of a downtrend. Then this crown cover pattern is equivalent to a shooting star, signaling a bearish reversal, candlesticks. So I just hope we will discuss more about these two combined candlestick patterns, to discuss more about them, and we know how they are used to trade in these markets. So guys, with those few remarks, I guess I've said some patterns that maybe are very essential to trading, and if you just start knowing about these candlesticks, they will help you trade both the forex and they will help you trade derivative. So stay tuned, and if you have not subscribed to this channel, kindly do so. If you have not subscribed to this channel, kindly do so, and we will be together as you proceed to subscribe and tell me any videos you want me to talk about. So that's it for today. That's Trade Pro FX with showing you all those candlestick patterns, that breakdown, and you can tell me other patterns that you want to master, so that you can able to read the market like a pro. So don't forget to subscribe and stay tuned for more tips, strategies to improve on your trading game. Happy trading, guys.